Hello everyone and welcome to Momentum channel. My name is Mo, and in this video we are going to talk about 3 undervalued utilities and dividend stocks to buy or watch right now in the stock market. Without any further ado, let's get into it. The first company to review is a company called Southwest Gas Holdings with ticker symbol SWX, traded on New York Stock Exchange. As you can see here, this company and its dividend payment has a very safe dividend score of 91. It has a dividend yield of 3.52% at this time, which is higher than its 5-year average dividend as a whole. The last trading price for the stock is listed here for the price of $67.67, and the company has a market capitalization of $3.92 billion. Of interest here is the amount of volatility, or beta, which is a matrix of how volatile the stock price is compared to the overall market. Any beta of under 1 suggests that the company is less volatile than the overall market fluctuations. In this case, for Southwest Gas Holdings, it has a beta of 0.62, suggesting that the company is less volatile. Southwest Gas Holding purchases, distributes, and transports natural gas in Arizona, Nevada, and California. The company operates in 2 segments: natural gas operations and utility infrastructure services. And as of December 31st, 2020, it had over 2.1 million residential, commercial, industrial, and other natural gas customers. The company also provides trenching and installation, replacement, and maintenance services for energy distribution systems and industrial construction solutions. Southwest Gas Holdings was incorporated in 1931 and is headquartered in Las Vegas, Nevada. Looking at the trends and history for the dividend payments, the company has paid uninterrupted dividend for the past 28 years without reduction. But of those years, the past 14 years of those, they have actually consecutively increased their dividend year after year for the past 14 years. So that's quite impressive. The company does pay a quarterly dividend and it's paid on the months of March, June, September, and December. Their current annual payout amount of dividend is $2.38. And as we recommended and talked about, it kind of shows a 3.52% dividend yield at this time. All right, so if you look at the company's valuation, you notice here that their current forward price to earnings ratio of 15.3 is well below their 5-year average of 20. That's for the company itself. And what's more, even if you compare that to the sector average for utility sector, the 15.3 forward price to earnings ratio is lower than the 18.5, again, which suggests that the company has a better valuation in terms of the price to its earnings than you compare that. Their dividend yield is slightly higher, of course, than their 5-year average, so that could be of interest for you. We also want to take a look at the price range of the company and what is this last trading price compared to their 52-week low to 52-week high price. Typically for myself, I avoid buying into companies that they are trading at or very close to their 52-week high price. For this company though, for SWX, you see that it's somewhere in between, almost halfway through, a little bit tilting closer to the 52-week high price, but it still has a wide, kind of gap in between there. So that's something of interest. The fact that the company's current price to earnings ratio is lower than the utility sector can provide a good buying opportunity, and especially for investors who are interested in kind of having that reliable source of dividend income from SWX. Now, moving on and looking at the tip ranks price estimates for the stock, there's one analyst covering this stock, and based on that analyst estimates, the 1-year price target for the Southwest Gas Corporation is at $77. And if it holds true, that shows an upside of above 13% for this stock. It's only one analyst reviewing the stock, so definitely take that with a grain of salt, but it is worthwhile to know where that analyst sees that, though they are recommending a hold on this stock at this stage based on that one analyst estimates. Moving on, the second stock that we want to review in the utilities sector is a company called Evergy. It is traded on New York Stock Exchange with ticker symbol EVRG. Evergy engages in the generation, transmission, distribution, and sale of electricity in Kansas and Missouri in the US, and it generates electricity through coal, hydroelectric, landfill gas, uranium and natural gas and oil sources, as well as solar, wind, and other renewable sources. The company serves approximately 1.6 million customers, including residential customers, commercial firms, industrials, and municipalities, as well as other electric utilities. Evergy was created in 2018 as a result of a merger between two different companies, Vestar Energy and KCP&L. Nonetheless, it has been paying its dividends overall for a longer period of time. It has a dividend safety score of 87, which is still considered very safe, and their current dividend yield is at 3.33%. Evergy has a market capitalization of $14.7 billion, and its last trading price was at $64.19, somewhere closer to SWX that we reviewed just now. It has even a lower volatility compared to the previous stock that we reviewed. It has a volatility of 0.5, suggesting the company is less volatile than the overall market. Looking at the dividend history, the company has paid its dividend without reduction for the past 17 years, and all those 17 years, they have actually every year increased their dividend year after year. So that's quite promising. They do pay quarterly dividend as well in the month of March, June, September, and December. And their overall annual payout is at $2.14 at this time. Looking at the valuation for the company, you notice that their current forward price to earnings ratio is slightly even less than their 5-year average. Again, it's a good sign, suggesting that the company might be less, valued in terms of less expensive than the typical how the company is treated and traded according to the investors over the past 5-year average. And also, it's slightly higher than the forward price to earnings ratio when you compare it to the sectors, the utility sector's price to earnings ratio for forward PE. It is definitely closely traded at their 52-week high price range. So for me, my take on this is that while the company seems attractive based on their dividend yield, as well as the being traded at a slightly lower than their 5-year average, the fact that it's trading closer to this 52-week price, I would probably kind of go about it a bit with more caution. And if I were to buy it, I'll try to put a limit buy order and try to take advantage of some of those market pullbacks. However, if you look at the overall analyst estimates, there are 4 analysts on TipRanks covering these stocks, and all of those 4 are actually having a buy rating for this stock and for buy, as you see here. And the 1-year price target based on the overall analyst estimates is at $69 for 1 year. That shows an upside of 7.49% for 1 year. The lower range of the price targets is at 67. The higher range of that, based on analyst estimates, is 70, with an average of $69 per share. And the last stock to review, the last utility stock to review, is the company called UGI, or UGI Gas Utilities. UGI is a holdings corporation, and it distributes, stores, transports, and markets energy products and related services in the US and internationally. UGI was founded in 1882 and is headquartered in Pennsylvania. The company operates through 4 segments: the AmeriGas Propane, UGI International, Midstream and Marketing, and UGI Utilities. The company has a market capitalization of 9.97, but it has a higher beta of 0.95, although it's less than 1, suggesting less volatility than the overall market. Definitely is higher volatility than the other 2 companies that we reviewed so far. This company is showing a score of 99 for its dividend safety, which is very, very safe, and it currently has a dividend yield of 2.89%. And the price, as you noticed, it was hovering around $47 at this time per share. The company has been paying its dividend uninterrupted for the past 33 years, and all those 33 years has every year increased its dividend amount. The company does pay a quarterly dividend in the months of January, April, July, and October, and their overall annual payout is currently at $1.38. In terms of valuation, if you look at it, UGI's current dividend yield of 2.89 is 35% above its 5-year average dividend yield of 2.15. which indicates the stock may be undervalued unless you believe that the company's outlook has weakened. Typically, when the price of a company goes lower, their dividend yield actually increases. And if that's if you compare that dividend yield to the 5-year average, it could suggest that perhaps the stock has room to grow in terms of the price. And as a result of that, that's why you're getting probably a better dividend yield for the stock. Hence that reference here, as you notice. What's more is that if you look at their current forward price to earnings ratio at this time, the forward price PE, it is actually sitting closer to 15.5, which is well below actually its 5-year average of 18.1. Again, it's a relatively good sign. The 15.5 is also less than the sector's price to earnings ratio for the utilities sector. The one little red flag could be the fact that it is being traded closer to its 52-week high price and the 52-week high price for the stock is at $47.88, which was actually captured most recently. So keep that in mind. Lastly, if you look at tip ranks, here there's 2 analysts reviewing the stock. One of them has actually a price target of $39 and the other one has a price target of $54, quite a range. And as a result of that, the average is 46 and 50, which shows potentially a downside of 2.62%. Now keep that in mind. Again, this is based on analyst estimates, but we saw based on the price to earnings ratio as well as the dividend yield, there are some signs that the stock could have room to actually grow in terms of the price. And it is also a very solid dividend payer. So if you're trying to look and pick stocks that are solid dividend payer for the past multiple years, in this case 33 years without interruption, and in fact actually they've increased their dividend year after year for the past 33 years consecutively, this could be another good pick for you. There you have it, folks. A quick look at 3 undervalued dividend stocks in the sector of utilities that might be of interest to you. The utility sector is actually a good pick, especially if you're looking for diversifying your investment and looking for companies that are in the utilities field as companies that have lower volatility. Could be ideal for very volatile stock market days, but also solid dividend payers in terms of having those consistent dividend paying coming in, at least based on the trends in the past several years, knowing that there's that high level of safety with these picks. Let me know if you are investing in any of these 3 picks that we talked about or any other company. I'd love to hear from you. So be sure to leave us a comment down below and let us know what you think. As always, I hope you found this video beneficial and you gained something of value from it. If you did, please be sure to give this video a thumbs up and share it with someone who might benefit from the video. And of course, don't forget to subscribe to Momentum channel. Here on Momentum, we post weekly several videos about stock market investing, finances, and financial freedom. Thank you, and I hope to see you next time.